Hello and good day. This is the daily analysis. The S&P 500, Nasdaq and Dow Jones indices on February 25th, price action on the 4-hour time frame. The S&P 500, according to our previous analysis, moved downward. It performed a...
Do you know why your profits are smaller than your losses? Because you don't analyze your trades, you just execute them. Download the Trading Journal app for MetaTrader 4 and 5 for free now.
Liquidity sweep and took out stop losses. And finally, with buying pressure, it moved upward. Our forecast is that the price will continue in this trend. It will continue its upward movement to collect liquidity on the buy side. And if there is an increase in displacement and positive momentum in the market, it can continue its trend up to the order block zone and enter that zone. But if there is only a single aggressive move upward, it collects the buy side liquidity and then closes again within the range zone. This indicates a trading strategy. It's a Ryan Soldier strategy where we can use this opportunity to enter a sell position and place the stop loss behind the zone, aiming for a risk-to-reward target of 1-to-1 or 1-to-2. However, it is recommended to avoid executing risky trades. Make sure to only execute those trades that have multiple layers of clear confirmations and are strictly based on your well-defined, established trading strategy. With the analysis of the S&P 500 symbol on the 1-hour time frame, the price movement trend is, we can see that after liquidity was collected, the price moved upward toward the buy side, and its movement target is set at the buy side liquidity area and the breaker block zone. By reviewing the news and the published consumer confidence data, we see that the number released is higher compared to the past 3 months, which is above both the forecast and the previous value, and it has once again entered the zone. This indicates that there is a positive sentiment and a good outlook in the market, which can push the price toward higher levels. At the time the news was released, we see that the price moved sharply upward. Also, by reviewing the multi-resi indicator from TradingFinder, we see that the price has entered the potential zone, which indicates the continuation of the trend. There was an upward movement in the market, but after that the price moved downward, indicating weakness in the uptrend. Uptrend. This shows us and suggests that if it fails to enter the buy zone, it could move downward from this area, which would indicate the end of the trend, and the start of a downward correction in the market, which could push the price to lower levels. Move it downward. Using the CVD divergence indicator, a negative RD has been identified in this area. If the price starts moving downward before reaching the liquidity zone, it could enter the rejection block area. If a lower swing low forms and a reversal is identified in the downward trend, and a support level or market structure shift is established, we can enter a buy position, set the stop loss behind the zone, and target the buy side liquidity area. ICT and smart money style traders use the Liquidity Finder or Liquidity Detection Trading Finder indicator. They can identify liquidity zones and double top and double bottom levels, which act as areas that attract price towards themselves. After liquidity is collected, the main move begins, and we can see that in every area where liquidity has been identified, the price has moved in that direction. In this section as well, liquidity was identified on the lower side, and the price moved downward. A stop hunt and liquidity sweep occurred, and then the price moved upward again. A stop hunt and liquidity sweep were also detected here. By analyzing the 15-minute time frame of the S&P 500 symbol using the ICT Killzone T-flap indicator, we can identify the Killzone areas and trading sessions. As we can see, during the host session, the price moved upward and then had a downward correction. It collected the sell-side liquidity from the previous kill zone and has entered a ranging phase again. Our prediction is that if the price moves downward during the London session, it could enter the fair value gap area or the rejection block zone. If it doesn't reach there, the chances of a strong downward trend and candlestick confirmation increase. We can use this opportunity to enter a buy position since we anticipate that during the New York session, the price will move upward. By analyzing the 4-hour time frame of the Nasdaq symbol, we can see that the price movement is in a ranging phase, with liquidity being held on both the sell side and buy side. It has formed a site that is currently near the buy side liquidity, and there is an internal liquidity level here that can attract the price toward itself. And finally, it enters the zone. If it enters a fair value gap in the identified area, and after an upward trend and a break of the change of character level, we can enter a sell position, set the stop loss behind the zone or swing, and aim for a risk to reward target, a 1-to-1 ratio or the liquidity zone on the sell side. The site is located in the lower part of the order block zone where after collecting liquidity, the price enters. On the buy side, it can move downward, and after that, we can update our analysis. Or if the price is accompanied by positive momentum and bullish displacement, it can continue its upward trend until it collects liquidity. It collects the liquidity of the limited BPR pool, and after that, if liquidity is collected and there is another pullback in this range, we can also use this opportunity to execute sell trades. With the analysis of the 1-hour time frame for the Nasdaq symbol, we observe the price movement, which has moved aggressively upward, and using the Ultra RSI indicator, a negative divergence has been identified. It shows that the price has not managed to return to its range, which indicates the end of the trend. The bullish trend and the start of a downward correction, which based on the correlation between the Nasdaq and the S&P 500 it could be a bearish confirmation in the Nasdaq and S&P 500, causing the price to move downward, collect liquidity from the buy side, and in that range, a rejection block could form a trading opportunity that we can use to enter a position. Looking at the 15-minute time frame of a closely related trading symbol, we observe the price movement during the Asian session, which has moved downward but has not succeeded in collecting liquidity. The sell-side liquidity was not collected in the previous session, which is considered an SMT divergence. Between the two symbols, Nasdaq and S&P 500, the price is currently in a consolidation phase. It could move downward, collect the sell-side liquidity, and enter the fair value gap area or a certain range, or become an order block. In each of these areas, if a reversal is identified in the downward trend and the strategy confirmation is received, we can enter a buy trading position. Also, an SDVD divergence indicator has identified a demand failure in this section, which can serve as confirmation of the end of the trend, an uptrend and the start of a downward correction. On the 4-hour time frame of the Dow Jones Index, we can see the price movement, which, according to our analysis, moved upward and re-entered the range area. By examining the price action in this section, it could be an AMD or power of 3 strategy. Here, the price entered the accumulation phase, moved downward, performed a manipulation move, and then re-entered the range. And ultimately, it is predicted that it will continue its trend and target higher levels. This is considered a bullish distribution move, which, with the review, we can see on the multi-RSI indicator. It entered the overbought zone but failed to enter the high potential area. From this level, the price could be rejected upwards, which would only result in a short-term correction to the downside. If selling pressure increases, it could then move back up again. But by analyzing the price action, we see that the price moved downward. Liquidity was collected towards the sell side, and finally, it closed with a pin bar candle. Ultimately, if the price closes with a bullish candle above the previous swing, it can confirm the continuation of the trend. There could be profit in the market by analyzing the Dow Jones symbol on the 1-hour time frame. Looking closely at the chart, we can clearly see the price movement accompanied by a strong bullish displacement, which we observe in detail using the multi-RSI indicator. However, the price has not yet managed to enter the high potential zone and is ultimately forming a series of lower lows. If the RSI continues to move downward and eventually touches these lower levels, the price can also be expected to continue this bearish trend and will eventually enter the critical rejection block zone for a potential reversal. After that, it can move upward from this area and we can set the price movement target. The buy-side liquidity zone is at the 49,723 level. We can set it so that if liquidity is maintained in the market, the price can touch this zone and collect liquidity from this area, and ultimately, an order block zone is also located here. However, if a weaker bullish trend is identified and the price moves downward from this area, If a change of character forms, it could result in just another buy-side liquidity being created in this area, and the price could move downward. Analyzing the Dow Jones symbol on the 15-minute time frame, we can see the price movement during the Asian session, which, like the previous two symbols, moved downward, created a liquidity sweep, and reacted to the order block zone. And after that, it moved upward, which is a liquidity grab. The sell-side liquidity is also located here, so we can consider this area as a zone. We can consider accumulation, manipulation, and distribution, where the price could move downward if a bearish pin bar candle forms lower, and after that, move upward and a bullish candle closes as confirmation. This would be considered as the second trading strategy that we can use. We can also use this opportunity to enter a buy position and set the stop loss and position within the range. Set the target for a risk-reward ratio of 1-to-1, 1-to-2, or keep it open towards the buy side. Also, if the price moves downward during the London session, it can enter a fair value zone. It could fill the gap or the order block zone, and after that, during the New York session, there should be a bullish distribution move. However, if during the London session the price moves upward again and re-enters the Asian session range, then in the New York session it could make a bearish distribution move. It will target the lower levels, which at the moment still reflects a bullish outlook within the market. Wishing you success and profits.